Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Trega, where we break down the news that matters most to your investments and your wallet. I'm your name, and today we're talking about a potential government shutdown and how it might impact your portfolio. We're at a critical moment in the U.S. economy, with a hiring slowdown stoking recession fears and inflation proving difficult to fully contain. But despite all these challenges, the stock market has been on a tear this year, shrugging off new tariffs, higher inflation, and even a sharp slowdown in hiring. The Dow Jones Industrial Average has climbed 9% so far this year, while the S&P 500 has jumped 13%. The tech-heavy Nasdaq has soared 17%. These numbers show that investors are largely unfazed by the current standoff in Washington, D.C. But what happens if the government shutdown lasts for weeks or months? Some analysts say a short shutdown lasting just a few days won't have a significant impact on markets. In fact, most government shutdowns since 1977 have lasted an average of just 8 days. Since 1981, only 5 out of 10 shutdowns occurred during S&P 500 pullbacks of 5% or more. However, if the shutdown were to drag on for too long, it could cloud the economic outlook and sour investors, leading to a sell-off. Jerome Powell, the Federal Reserve Chair, recently described this situation as a challenging one, highlighting the need for policymakers to steer the economy through a period of turbulence. Callie Cox, chief market strategist at Ritholtz Wealth Management, notes that government shutdowns have never led to a recession or market crash. In fact, the S&P 500 rose more than 10% during the 35-day shutdown in 2018. So, what's driving this optimism? Some analysts believe that investors are simply looking for an excuse to pull back from the markets, which could create buying opportunities for those seeking high-quality firms at bargain prices. Brett Kenwell, an investing analyst at Trega, says, "The market is not showing complacency, but rather a sense of context based on what has happened in these situations before." John Stoltzfus, managing director and chief investment strategist at Oppenheimer Asset Management, adds, "We don't think you blindly buy the dip, but go for the babies thrown out with the bathwater." This means that investors should be cautious, but not overly pessimistic. So, what's the outlook for the markets? Some analysts forecast a decline of between 5% and 10% in the event of a significant government shutdown. However, Stoltzfus believes this would likely prove temporary, creating a buying opportunity for those willing to take on some risk. Ultimately, the key is to stay informed and adapt your investment strategy as needed. At Trega, we'll continue to monitor the situation closely and provide you with expert analysis and insights to help you make the best decisions for your portfolio.